Okay, so I just quickly wanted to go over what just happened in the market. I know this isn't real time, but I just wanted to cover the points in the video so that you could see how it worked. All right, so this is what was happening. The first thing, of course, as always, is to check where did my mouse go? I lost it. There it is. Was our state into the close yesterday? Make that a little smaller. And yesterday, the problem was the bulls were having a little bit of difficulty getting things going. The bears were doing their best to keep control of the market. We had a sample right into the close, which didn't quite give us any volume. So the bears didn't get any trapped orders to trade against, and that can be a problem. So looking at that, and then how that yesterday what happened was the market was pushing down and liquidating this bullish position, essentially trying to push them out as best as possible. So this morning on Monday, what the market was looking to do was to see if the bears were going to continue to move the market. And the very first thing that happened was right off the open. It's hard to see here. We had daily tension push up over 0. And the bears came in as best they could and gave the market push. The first thing that happened, we'll go through these. There were 2 things that happened that you needed to track. The first was it pushed down. There's the trapped volume. And this gave us bullish liquidity, which immediately fell apart, pushed down, and you could see tension curled down, got liquidated. These bulls failed in that they didn't do anything. So it wasn't like we saw bulls hit right there and impact tension and then get wiped out. They just stepped aside. And I think that's actually pretty reasonable because if you look, daily tension just got tested. This is a big moment for the bears. They've had and been able to control tension for 3 whole days. So this was a moment to see if those bears were going to come in and defend. So of course the bulls moved out of the way. That's stepping right in front of the main large position of the bears. That's not what you want to do. You want to wait to see what they're going to do and then pick up some liquidity after. So I'm not surprised that the liquidity didn't work. But there was something else going on that you needed to notice. As this moved down, we were getting a decay retest off of yesterday's low. A decay retest, or a multi-day decay retest, I'm going to write DR, decay retest has 3 steps to it. First you get the retest, then you get the trapped orders, and then you get volume showing the market is lurching in that direction. A decay retest is different than liquidity. Decay retests are a last-ditch effort. This was an interesting situation, and I'll show you why. There are 2 rules to getting a decay retest. The first is that you need to show no other options. So if you notice, velocity could have burned all the way down to 0. So this is a little bit of a problem, but you can also see that waiting for velocity to get down to 0 literally could take all day. And there's no way that the bulls are going to wait for that. The second thing you want to show is that they want to enter the market. And I'm under the impression after playing yesterday, even I played, that the bulls are looking at picking this up. And this morning, the reason they didn't step in here was because of the daily test. So you don't pick up liquidity right in front of that, or you become the liquidity. And that's, I think, what happened. So moving down here, I think there was some precedence to see the market move up, but this was a difficult trade. Velocity could have moved down and sampled the bulls. We could have seen, this kind of action from price and then move up and had a sample right into the lows. That's absolutely possible. The point is, right at the lows, we had a decay retest that showed up with all the trimmings, everything you needed. It had just liquidated some shadow bulls. Anyone who picked up that got pushed out as the market pushed past Friday's lows, and we can see that right there, tension curled down. We know people got liquidated. They got liquidated into a decay retest. That decay retest had everything put together. It worked out. If you waited for the new highs to show up, it was right into the lows and moved. This isn't cherry-picked decay retest. This is how they work. I tend to like the wide short. I like to see it so you get the wide test and then a short time frame test like that, and then that second peak. There was not really one there. You could sort of say this moved up and then it was a second one, but not really. This was just a straight decay retest that rebounded and just played really, really well. That's what happened. Now, why would the bulls pick up this decay retest? Well, check this out. Look at what happened. These bears, they did their very best to defend right there. They didn't get much ground. The bulls came in, picked up the retest, and the bulls now have daily tension over zero, 30-minute tension. The bulls realized what they could do, and they're doing it. The bears dropped the ball basically off the open, in my opinion. The fact that they let daily tension get to zero at all is kind of a problem. 3 days, they established themselves, they got everything lined up, and right off the open, they're already getting pushed back. That showed some weakness, but the second time, getting it back the second time is a problem. So there's bulls sitting right here, and I think these are legitimate bulls. It was just a tough trade, and that's why it worked so well, in my opinion. It moved up, and in that move, we're able to get this daily tension over zero. Now what the bulls need to do is to shove and push. We cannot have these bears come in here and defend 30-minute tension going over zero. I don't really want to see this. Why don't I want to see that? Is it because I'm bullish? Well, yeah, I'm a perpetual bull. It's just what happens. But at the same time, the big reason I think that the bulls don't want to see that is because this whole situation here has a lot of really decent-sized players in it. If we let these bears defend 30-minute tension and drive it back down, this really nice trap down here that was a tough low to catch, but it was not impossible, this nice trap would let all these people out. We don't want that. If these guys come in and defend this and bring it down and we see prices come back down, sure, we'll retest the expansion and maybe blah, blah, blah. The point is that when you trap a bunch of people in, don't let them get out. Shove. I would love to see the bulls come in, give us a news event, and just start pushing like you've never seen. Because that could get this tension up through zero, get us moving, and pump this up. Maybe we close like here. Maybe we close like a negative 30% on tension right here, 30-minute, and we get that up there, and the bears completely lost control, and they'll never get these prices back until they concede and let go. So what I'm going to be looking for is when you have a massive trap over a day or two versus just an entry that's set up, what happens is you get the market pumping like this. You see how this people got in trouble, and it really did move. And so I would expect to see this really, like we see a really decent pump and likely some acceleration in there that would indicate people getting blown out, having to unwind their positions. They were wrong. Oh my gosh, it's so terrible. I really don't want to see this coming back. I think that would be weak in terms of players in the market because that's letting them out. It's such a rangy thing to do. It's just lame. So we've got a bunch of people in this area here that are trapped on the short side. We have the bulls picking up a difficult risk reduction position. They've pushed it up. They're really close to getting this tension over zero, and that's the next thing I want to see. Now, Joe pointed out in the room that the advanced decline was really strong and it stayed strong, and he's right. This is something you can look at here. The advanced decline, you don't see prices just start plummeting with advanced decline at plus 1,000 or more. If it's greater than 1,000 and prices are plummeting, it's like, come on. You telling me like most of the stock market's just like, and the indexes are going down? So that's an indication that you could have looked at. One of the finer points that I want to point out that's a little more difficult to see. You see how portfolio orders this yellow indicator? You see how it's overpriced and it's pretty consistent as we go down. You see that? And then it's pretty consistent as it goes down. Where were the portfolios this morning? They picked up a tiny little order right there at the low just before we started to get the market lurching. There was a portfolio, a broad market. This indicator tracks portfolios that fill market-wide. They don't come in and buy futures. They buy every stock that's listed on the exchange in an attempt to take advantage of all of the equity market. And that's what it's looking for. There was just a tiny little order. They weren't filling. So by way of comparison, if I zoom this out a little bit, you could see, they filled a little bit, and it sort of didn't work. Whenever they like to fill all the way down and move. So you get this all the way down. And then they slow down their filling just as you get near parts of the market that'll pivot. And this is like a longer term time frame type thing. So they like to fill see that? They fill all the way down, and then they slow down, things turn. So in this low, you could see it's plummeting, pushing new lows. Where are the portfolios? They fill all the way down, and there was no filling here. From portfolio standpoint, this didn't look like portfolios filling all the way down. It looked like a tiny little order filling right at the low and turning the market back up. So this is a little bit more nuanced, but I thought it was, from my opinion, like a big, huge, bright, shining star, like in terms of blinding. I was like, whoa. You're telling me that the bears are going to defend daily tension, that the bears are thinking we're going to drive this down like that, and the portfolio orders don't seem to care? Those are like opposites to me in terms of what's going on. So I took that to be a bullish thing. We had our decay retest show up right there. We had bears come in and defend, but they took out that, but right into that a risk reduction position, and that just immediately started working. And right about here, I was pretty clear about what was going on. Right once this decay retest started working, about here, I was like, I know exactly where this is going. This is going to move up, 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 and we're going to get this here. And now this is the moment where the bears have their last stop. If the bears don't defend this right here, what's going to happen is everybody who participated in getting this down, everybody who participated in controlling tension is going to go, crap, we're losing tension. Possibilities are going to roll against us, and we're going to start to see some unwinding, and you're going to see some shots up. Those shots up are people unwinding. They're fake news stories that the bulls are going to need to run to get to trigger those algos. So whatever the headlines are, just look for the bullet point words, the big words that trigger the algos, because the bulls want to push this through. We can unwind some serious bears and get this thing shooting up like a rocket ship. That's where we're at. I wanted to make a quick video about this because I think that the events today played out really quickly, and they're important for the overall trend and the way it's developed. So that's what's going on. I'll do another video later and talk about how things played out and what's going on. So good luck, guys.